Hello everyone, welcome back to today's edition of Lux Ledger. In today's news, we are going to discuss two important news. First and foremost, Celine's foray into beauty, and secondly, Inditex full year earnings. That's the 2023 earnings for Inditex. Let's start with Celine. Now, what we have seen in the past couple of years is that almost all luxury conglomerates, starting from LVMH to Richemont to Kering, are trying to launch into beauty segments with the various brands that they have, and also they are trying to bring those beauty segments in-house. Now, similarly, within the LVMH in-house beauty segment, we are having Celine launching into beauty. As we all know that Celine's current artistic director is Hedi Slimane. Now, it is being said that this is the brainchild of Hedi Slimane, and he did launch perfume earlier in 2023, and now he has forayed into beauty for Celine with a couple of collections that are being mentioned. And this is mainly the Celine Beauty and fragrance division is being built from here on. What I wanted to stress in here was that LVMH, Celine, which is a part of LVMH being the parent company, in last year, that is in 2022 and 2023, the branch kind of registered sales of 8.27 billion, which is up 7% from 2022. So this is one of the fast growing segments. Also, given the current economic conditions, we know that the top 1% is spending as they will always spend, and they form approximately 40% of the sales of most of the luxury brands. But then with the massification of luxury, especially with the conglomerates taking in all these brands, and then with uh, the lowest common denominator being the one that is being spent on, that is the aspirational group that is being catered to, we are seeing that all these brands are trying to get more into logo products or into fragrances, into accessories, and now into beauty. So beauty is one of the segments that is performing well, that performed very well during the pandemic also, especially the prestige beauty segment has been performing very nicely. We have seen a lot of celebrities, new celebrities also, like Hailey Bieber launched their own beauty segments. Selena Gomez launching Rare Beauty, and all those products have been doing very nicely. All those lines have been doing very nicely, and given the growth potential of the market and given the market as a whole, we will be seeing a lot of other brands and a lot of other companies kind of cater to the prestige beauty segment. If you remember, in the last couple of months, we have been seeing a lot of stress on Chanel Beauty, a lot of stress on Dior Beauty, and now whatever brands do not have those segments are going to be launching into those segments also. So this is with respect to luxury and the beauty segment, and Celine launching its own beauty segment. Let's move on to another news. In the last Lux Ledger video series that we did, we discussed about Mango's financial results. Now it is being said that Mango is going to have or is going to target revenues of around 4 billion by 2026, and it was celebrated all around that it has already crossed the 3.1 billion euro mark in 2023. Let's put that in comparison to Zara and the Zara parent Inditex. What I wanted to stress was that the sales figures at Zara are at 35.9 billion euros, that is approximately 40 billion euros. And what Mango is trying to target is hardly 10% of this 40 billion euros. So given that, what I also wanted to discuss when we did discuss the Mango video was that over the last couple of years, Mango has tried to kind of take a lot of stuff in-house, especially with respect to the Indian market that I saw when I was there. There was a lot of store closures, and then Mango rolled out their own company-owned stores, and they moved from the wholesale model to the in-house model, which did perform very nicely earlier on. And what we did saw was there was an improvement in the quality, but then in the last one and a half year, what we have observed here at Luxe Leisure is basically that the quality is not the same. Given that it is one of the fast fashion brands, it should not even be expected that the quality is the same. But still, um, if we talk about fast fashion and if we talk about these retailers who are doing very nicely, we have a couple of brands that come in comparison. We have Zara, its parent Inditex, we have Mango, we have H&M, and at a point of time they had very comparable sales. But Zara has left them far, far behind, and it has been because of very focused approach into how they want to build Zara brand and also the brands within the whole group. So let's come back to this. Now, sales at Zara are approximately 40 billion euros for the full year, and they reduced their inventory by 7%, and they have a lot of other projects going along. For example, Zara Pre-Owned is being launched. There is live streaming in US and UK from its own platform in the coming weeks. Also, there are a couple of other things. If you remember, Zara has been spending hugely on logistics. Zara has been spending on acquiring warehouses wherever it can acquire. And it has a 900 million euro plan to add distribution centers in Europe, mostly in Spain and Netherlands, over the next 2 years. And for this, I also wanted to focus on what is being said by the company, and it is very insightful. Let me read the full quote here. This is probably the moment in which the company has thought it should add muscle for future expansion, for future growth. This is very much our thinking. We see very strong growth opportunities, and the main goal of the company is always to invest ahead of the cycle to be able to maintain these opportunities in the marketplace. The flexibility and responsiveness of our business in conjugation with in-season proximity sourcing allows a rapid reaction to fashion trends and a unique market position, which is very, very true. This was one of the competitive edges of Zara when it launched. And we see that momentum has been rolling into 2024, and they saw an 11% year-on-year growth for the period of February to March. And I wanted to kind of end with their how they've kind of integrated online and offline. And for this also, I would like to kind of mention the quote wherein they said that I would like to highlight that all of this, the sales increase, is a consequence of our fully integrated model. It is not possible to understand properly the strength of our online sales without taking into consideration the operational support provided by our stores. And it is not possible to understand the very positive evolution of our sales in physical stores without bearing in mind the strong prescription capacity of our online platforms. So Zara seems one of the few companies which has a very integrated model, which has a seamless flow, at least at the back end, wherein if you're ordering online, you don't know how those orders are being fulfilled and how much support is being provided by the stores for the same. And I also wanted to mention the number of stores that Zara has. Zara at the end of 2023 had approximately 5,692 doors open, and growth kind of came in from the European market mainly, and most of the growth, that is approximately 50% of the growth, came in from the European market, which was followed by the American markets, and then finally by the Asian and the rest of the world. Here it is. Europe remains a stronghold with nearly 50% of the sales coming, excluding Spain. Spain brings in another 15%. Americas in total accounts for approximately 20% of the growth, and Asia and rest of the world represent nearly 17% of the same. And within the mix, within the Zara, the Inditex group, Zara out of that 40 billion euros, Zara contributes 26 billion euros and is the top performing brand. So that's all that we wanted to discuss with you today here at Luxe Leisure. I hope we've been able to put into perspective Zara's earnings, Mango's earnings, and also the launch of beauty verticals at various luxury brands. Do stay tuned in for our next video. Thank you.